All right, I'm going to take a look at, actually, I think I'll take a look at all the markets today. I wanted to see today's action before I tried to make this call. I wasn't really sure on Friday whether this was just a half cycle low um, and then another leg up or whether we were starting an intermediate decline. But I think we're probably starting an intermediate decline. And so that means that price should eventually break this intermediate trend line. But we have a FOMC meeting next week, and the Fed rarely allows the market to drop into an FOMC meeting. So, and also the McClellan oscillator is already pretty oversold as of Friday. It's going to be really oversold after today. And as I've mentioned before, almost all of these intermediate declines unfold as an ABC wave pattern. So this would just be an A wave down, and then there would be a B wave bounce that would kind of get everybody back on board a little prematurely, and then you get the C wave down that makes a lower low. So it was a little bit obscure here, but you can kind of see that's what happened here. Much clearer during this intermediate cycle low. So I suspect this this part of the sell-off will probably be over pretty quickly early this week. Maybe we come down and tag this trend line and then bounce, and then after the FOMC meeting, we price breaks below it, and we get our final intermediate cycle low. Now let me move over to the tech sector. So tech has been much stronger. When the S&P put in a daily cycle low right here, the Nasdaq didn't even drop below the 10-day moving average. So it's just been, money is starting to kind of migrate into the tech sector, which is kind of what I would expect to happen. I have also noticed in one of my previous videos that the advanced decline line is starting to diverge. That tends to happen when you're getting ready to put in a major bull market top. So I continue to think we're about to get our final melt up phase in this bull market. I think it's going to occur in the big name tech. The FANG stocks are going to drive it. So it'll be in the Nasdaq Composite and then in the Nasdaq 100. So kind of what my best guess. The S&P is going to put in a half cycle low here pretty quick and bounce. I don't think the S&P will make a higher high above the recent peak and then roll over and give us that C wave down into a final intermediate cycle low. The Nasdaq may make a higher high here. I noted in one of my previous videos that it tagged this resistance zone at 15,000 on the Nasdaq 100, but it did not do it on the Nasdaq Composite. Came up about 200 points short on the Nasdaq Composite. So I think there's a modest possibility that the Nasdaq continues to show relative strength, and when the S&P bounces out of the half cycle low and heads up for the FOMC meeting, that the Nasdaq 100 completely recovers and the Nasdaq Composite makes a higher high and maybe tags that 1500 or 15,000 support zone. So here's the Nasdaq Composite. So what I think has a reasonable chance of happening is like I said, we put in the half cycle low here pretty soon, and then the Nasdaq Composite comes back up, makes a higher high, and tags or almost tags that 15,000 level, and then we get a really sharp drop, maybe all the way back down to retest this breakout here at about 14.2 as the S&P completes the C wave down into a final intermediate cycle low, and then I think that's our volatility event, and sentiment should be completely reset, and that would probably power that melt up phase that I'm looking for a final bubble top in the stock market. All right, a quick look at oil. I had noted before this resistance zone at about 67, 60, or 70, $77. Let me widen the chart and I'll show you that. All right, so here's the two major resistance zone. You can see this rally kind of petered out, had to take a breather at this resistance zone at about 66. Once that was finished, then I noted the next resistance zone was going to be at about $76, $77, and that was potential spot for maybe this intermediate cycle to top. This was the previous intermediate cycle low, and this was an intermediate cycle low. This was the top of the 3-year cycle for oil, and you can see we're already testing it as we've come out of this 3-year cycle low. So as I've said in previous reports, I think we've transitioned into a long-term secular bull market in commodities. So you can see very early in this 3-year cycle, we're already testing the previous 3-year cycle high. Once this correction into the intermediate cycle low, which is what I think we're also in energy and commodities, that they are due for an intermediate correction, then I think oil's probably going to come up and make a higher high. I don't think inflation is going to be transitory like the Fed believes. So I believe commodities and energy are also moving down into an intermediate degree correction. All right, here's the daily chart of oil. So we're already kind of forming an ABC pattern in oil. Here's our A wave down and our B wave bounce, and then now we're in a C wave. Sometimes it can end up being more than 3 waves, but it looks like an intermediate decline has started to me, where we've changed the pattern of higher highs and higher lows to one of lower highs and lower lows here. So we're in the declining phase, pretty sure anyway, in the declining phase of an intermediate cycle. And once it bottoms, then we'll reset sentiment, and we'll be ready for another leg up that should break above this $77. And finally, gold. This one's going to be difficult and erratic. The cartel would like to drive gold back down and make a lower low. I tend to think that this was probably an intermediate cycle low. You can see we had a huge attack this morning, but the bulls are already defending. They're defending this 1800 level. Anybody's guess as to whether or not which side is going to win on this one. We'll just have to wait and see. The COT was extremely bullish right here, and when that happens, it usually means the intermediate decline is done, or price isn't going to make a much lower low. So even if the cartel wins and they take gold back down and they make maybe break a little bit below this, it's probably not going to be by much, maybe just a marginal break below that before a larger degree intermediate bottom, and then we start the next rally. So we're just going to have to see how this battle plays out. The cartel is trying to break 1800 again. The bulls are trying to defend against it. I think a lot of the attacks are going to be in silver and gold miners right here. They've managed to get out of a lot of their shorts, and I don't think the cartel wants to risk adding a ton more shorts to gold. Again, I think they got a gift on the FOMC meeting with this sell-off, and they were able to unload quite a few of their shorts. I think it's going to be dangerous for them to build those shorts back up here. So I don't think they're going to attempt to suppress gold by adding shorts in the gold market. I think they're going to attack the gold miners and silver and hope that gold follows. Right now it's just up in the air whether or not the bulls are going to allow the gold to be suppressed any longer. They're defending it at the moment anyway. And I should add, when stocks complete that, what I think will be a B wave down, that should be, we're going to have a growth scare. The Fed is going to panic. They've got the Jackson Hole meeting in the end of August. They're going to um, pump a bunch of liquidity into the market again, make sure the market's pumped back up ahead of that Jackson Hole meeting, and so I think that's probably the recipe for gold to give us that next intermediate rally. My assumption at this point is that we put in a final bottom of this cup and handle, or of the handle part of this consolidation, and that the next rally on that um, doubling down of QE in order to save the stock market will probably push gold back up above these highs and give us a confirmation that gold is now making higher highs and higher lows again of an intermediate degree, and so the bull market would be back on. And I don't think the 4-year cycle has topped just yet.